This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices steady right now, but I'd have to say that futures are holding up relatively well, even though we did get somewhat of a surprise increase in jobless claims coming in up 21,000, and that was quite a bit higher than the estimate. That was at 311,000. Also, we continue to feel that as long as the Fed remains accommodative, with their Fed funds rate likely to remain at 0 to 25 basis points, in our opinion, out till 2016, that futures will continue to be well supported. Over in the currencies, looks like some short covering coming into some of the currencies, especially in the euro currency this morning, even though we did have gross domestic product numbers coming in on the weak side. Eurozone GDP coming in unchanged. The guests called for a 0.1% increase, and yet the euro a little bit better. Also, we are seeing the Japanese yen trading steady to a little higher, even though we did have Japan's machinery orders falling 10.4%. So a big decline there, but short covering supporting this market. I think temporarily, though, we continue to believe that Japan's economy will continue to slow. In fact, it should slow to the point where the Bank of Japan comes in with more accommodation. More accommodation means lower rates, and that should translate to lower prices for the Japanese yen. So we remain bearish on the yen. And in the interest rate markets, futures trading higher, being supported by the increase in jobless claims. We also feel that if we are correct in our thinking that the Fed will raise interest rates later rather than sooner, that the bull market in treasuries should remain intact, especially at the long end of the curve. So nothing changing in our long-term view on the credit markets. Look for higher prices, especially for the 30-year bonds. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniel Smith.
She was at the football game last night. UVA. I know. I've been short.